What's good, everybody? I hope we're all doing well. Now, you can imagine the context that I'm going to be discussing right now is probably something that you've all been looking to see and watch, hear, whatever. We're going to be looking at candlesticks today. Now, this is going to be like a mini series on helping you understand why the candlesticks are so important. Now, to approach this game by simply drawing M's and W's, okay, it's just not enough. It might work, but you're going to want to know why the pattern plays out. All right? What constitutes a successful pattern? Why does price come back to the 50 and then moves away in a convincing manner? It's nice to see these green and red candles depending on the trade you have, but we need to understand why. What are they? You know, why does a shift candle have a difference, okay, than the same candle that appears at highs? Why is the same intention not applied? All right, so let's get straight to it. Ethereum. Man, something is fishy. I said it in the videos earlier on today. Something is not right. Okay, they are doing something. Now, let's just take a trip down memory lane, okay, so that we understand where we are. But the last time Ethereum did this sort of behavior, let me get rid of all of this stuff here. Okay, she did this aggressive move to the upside and then she crashed at a moment's notice. All right, what took near enough 1, 2, 3, 4, 5 days to achieve was achieved in less than 1.5. Recovered completely. Let's understand how these candles really work, because without these candlesticks, the pattern alone isn't going to serve. You're going to struggle. Okay, it's easy to see M's and W's all over the place. Why do you see so many of them? Because they're manipulating price. Understanding the candlestick is going to free you from being indecisive with your entries, because you're going to see the psychological effect that they have. Let's get to it. Let's start off with Ethereum's move last time. It's the best way for me to demonstrate this. What do we know? We know the red candlestick implies that the market maker is building his longs. First rule, the market maker will never buy at a high and he will never sell at a low. Get that in your mind. Write it down. Put it in front of you. Do what you need to do. He never buys at the highs. He never sells at the lows. That's what the retail trader does. Okay? The retail trader is going to be sat with his friends at a table drinking coffee. One of them flips their phone out and says, yo, Bitcoin is rising. They're all going to buy. Likewise, when they see the same sort of scenario, but it's dropping, they're going to say, yo, look, Bitcoin's dropping. Let's go short. The retail trader, he's impulsive. He's irrational. He's not systematic. He's not objective. Let him behave that way. He's the liquidity. We need him to behave that way. Why? Because we're running on the market makers. We're jumping on their backs when they move. So when we see the market maker print a candle like this, we know that he's building his longs. Now, consideration needs to be here. If the candle, okay, doesn't complete, doesn't mean that it's not valid, or should I say there's not enough pressure to the downside, all right? They're just working the range. They managed to tap the liquidity to the lows, all right, and reversing back up a little bit, but still within the red formation. It is still an aggressive candle. What you need to understand is this. Notice where the candle changes color. Look at the chart. It's changed as it's come below a moving average. Sorry, changes as it comes below the moving average. Yeah? That's where they started inducing the retail trader to go short. That's important. We know market makers are stepping in here. We know market makers favor lower prices. Notice the stopping volume. A stopping volume candle is a small body and a wick. The bigger the wick, the better the power of the stopping. Okay? Didn't make sense, that. The bigger the wick, the more influence, okay, and more relevance that the market maker is effectively trying to stop volume from going in the opposite direction. Remember, a stopping volume candle implies, okay, at that moment in time, that he doesn't want price to go down lower yet. Why? Because he wants to induce the retail trader to commit his money. Look, retail traders earlier saw this as a little double bottom. They probably thought that there was going to be support. Price comes back up. He induces, traps them, and goes down lower again. He makes them believe one more time that price could potentially come back to the 50 and continue up. Price closes above, look, the 5 EMA, okay? A lot of traders trade on that signal. But then what happens? It pulls back, comes back one more time, pinned to the low. People are thinking, right, there's a hammer, okay? Yippee-ki-yay, we're ready to go to the upside, okay? But what happens next? Market makers step in and lay down their intentions. So we know the market maker is favoring lower prices purely from this development of the candlesticks right here. It goes lower. A purple candle, violet, implies that volume is starting to rise. So again, notice how strongly it closes. Closes right at the lows. We know that the market makers still favor lower prices. They're getting the retail trader to go short. Okay? He builds his longs. And what do we see? Stopping volume yet again. Stopping volume is present in this zone. They don't want retail traders to continuously send prices lower. So what do? They spike the low, trigger the shorts, but then reverse it all the way back and take out the stops. Market makers are planning on bringing price back into the range. They don't really want it to go any lower. Then what happens? You see this big spike to the low and then these pins, and then price starts to normalize and then they reverse it back up. Notice that the stopping volume didn't appear at the lows. This was the clue that they wanted to change the direction. Now market makers can allow price to go against them and go into the favor of the trend for the retail trader, okay? Because he's going to try and absorb as much of the liquidity as he can. That's the important thing you need to understand. If you see a stopping volume candle up here, doesn't mean it's not valid. It just means that you know the market maker is putting on the brakes. Remember, the retail trader, he's not going to have enough pressure to move price down lower. Market makers are allowing them to do that. Within this candle, there could have been more notable volume candles. Now, at this point, we may think that if there's no notable volume here, does that mean that the retail trader is taking control? No, the market maker is effectively deciding in this time frame, okay, that by him pushing price down lower, all right, he's just going to get that last push by the guys who went short here and got stopped out, give them another reason to step in, to commit more liquidity, and then he stalls and then reverses price back to the mean. All right? Notice this candle here, the green candles. This is where it gets tricky. If you were to see these green candles, you would assume that the market makers were trying to shift out of the zone. Are they ready to go up? But look what happened. It recovered the previous zone here. Frighteningly enough, look at where the start of this candle, the red one, look where it starts, okay, and look where it finishes. It's despicable how close they can send price to the previous zones that they were building their positions. It's frightening, isn't it? Go on the charts and have a look. See if you can find this relationship. Can you see a red candle and look right and see if there's a green candle corresponding to it? At the high, look at the pins, man, of those two green candles. Work in those zones. All right? Why were these two green candles not favoring higher prices? It's because the market makers had effectively achieved their longs. They realized their longs and they wanted to realize a profit. At the same time, building shorts at higher prices. Notice now that the retail traders seen this candlestick and thought, right, there's support at the 50 EMA. Let's get in. Market makers raise price. Instantaneously, the next candle, they spike it back down. They trap them again. And then what do you see? 1, 2, 3 pins to the high. Stopping volume coming in. Guys are favoring higher prices. Spike, drop, spike, drop. Okay? Market maker is trapping them. He wants lower prices. The retail trader sees higher price. All right? When you see the pins, okay, if you notice, when they are at above the areas, when you see pins above the candlesticks, it means they're working the highs. That means they're building shorts. If you see it below, you know they're working the lows. They favor higher prices. Just look at that. No pins to the low. None in this area. There's pins here, pin, 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 pin. They are favoring higher prices because retail traders coming in and he's trying to buy. The market maker is fulfilling that obligation for them. Okay? And then what happens? Stopping volume, drop. Market maker has laid out his intention. He's trapped enough liquidity. Off he goes. He makes a run for profit and he builds longs at the same time. He closes the shorts and builds his longs. Pretty fucking confusing, isn't it, guys? But who said this game was easy? This is the hardest, easiest way to make money. Welcome. Now we've got a pattern. What do we see? Vector candles to the downside. Market makers are building their shorts. They induce retail traders to go short because the price has shown rejection at the 50 EMA. Retail traders obviously had a whale of a time over here. He's been getting screwed over left, right and centre. He starts to see price coming away from the 50. Right, that's it. I'm going to go short. Market maker fulfills. He gives him the short. Comes back, taps the 50, pulls back. I'm staying short. That's what the retail trader's saying. And he's continuously riding this move. Retail trader is euphoric. There are guys starting to jump onto the idea that price is dropping. So what do? They get involved. Notice the aggressive vector candle to the downside. Market makers see enough liquidity. Bang, they reverse back. They tap the stops. They continue lower. And then they go make a run back to the 50 EMA. Why? Because they need to take the stops to use that liquidity to realize a profit on their long trades that they built in this area. All right? Then what happens? The retail trader that got stopped out in this zone right here says, right, that's it. I need the 50 EMA to show a rejection point. I need to see that there is favor to the downside. Market maker does just that. Look, price doesn't even go above it. It stays below it. Okay? He then retraces price. He gives them one last push to the downside. The retail trader has done a fantastic job. He said to himself, you know what? I'm a fucking trader, man. I'm good at this game. All right? I'm going to rip it apart. Then we see the stopping volume. Market maker taps the lows, brings it back. Taps the lows, brings it back. Red candle, green candle. Now the importance of the red and the green candle is here. Market makers are not allowing price to go any lower, but they were just gathering the last few longs in that zone. Okay? This candle right here was the candle that the market maker decided to start getting his longs filled at higher prices and start to build shorts. All right? Now, price comes to the right, pin to the low, pin to the low, pin to the low. 3 pins to the low. Market maker reverses and shifts out of the zone, trapping up all the retail traders that went short here. Okay? He uses their liquidity to realize a return on his positions. Remember, for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. The market maker needs to reset that cycle continuously so that he can move his positions in his favor based on the liquidity that is trapped here. All right? Price closes strong above the 50 EMA. Price now starts to rise. Retail traders probably feeling really flabbergasted and really like, whoa, I don't even know what direction it's going in, let alone all the leverage that they're using. What we need to understand is this. Why was this candle, on the principle of them using this candle here, if they're shifting out of the zone here, would this not be the same principle? Well, let's look at the candlesticks. Where is it? Price has just been rising for a few moments. It rises, pulls away from the 50 EMA. Notable volume comes in at the high. Okay? Look. Comes in at the high. It doesn't close strong. It spikes and pulls back. Market maker is waiting to induce retail trader into the belief that price is now going to continue higher because it's gone above the 200 EMA. Everything is looking good for the upside. Happy days. What do? Fulfill that obligation, spike it to the high. Some poor person managed to go long here. It's very unfortunate for him because the market maker snapped price back, recovered the previous green candle. When you see the green candles appearing at the highs, you know something is fishy. You know something is going to change. Because if we focused on the principle of the supply and demand aspect, where when price is rising, buyers are in control, surely a buyer isn't going to put a stop to him earning money, is he now? No. The only person that puts the brakes on is the market maker. Why? Because when price rises as a green candle, we know he's building shorts at the highest possible price to get them closed at a lower point later on. Price then drops aggressively, recovers all of the previous move, taking out all the stops for the retail trader. Retail trader is now done for, okay? And one makes one last attempt at the 50 EMA to make them believe that now the 50 EMA has now become the new resistance. It's not going to go any higher. And before you know it, the next candle opens, drops even lower, commits the retail trader to go short, and the whole process repeats itself over and over again. And then up she goes. All right. Now, I hope this video has actually helped you in some way. I'm going to be doing a few more videos on this, okay? But in the first instance, I just wanted to help you just get a grasp of understanding the importance of the candlesticks, all right? When you see candlesticks appearing green at the highs, here's another example, look. Working at the highs, price is away from the moving average. It needs to come back down to regulate. It pumps up, gives them one last attempt, fulfills the order. Some poor retail trader went long there. Aggressively come away from the zone. Go back in the charts. Try and find this little formation. Try and see if you can notice when their green candle appears at the highs, what happens next. If the buyers were in complete control, they would be sending price higher. You're saying to me that the buyer says, hold on, let's put the brakes on. Buyers are greedy. Sellers are greedy. Buyers are fearful. Sellers are fearful. Until you kill the idea of what fear and greed is in a trader's mind, okay, the marketplace will be forever, okay, making money. And I'm talking everyone will be a winner. But because people have different concepts of value of price at a certain point in time, they trade different strategies, they have different motivations for trading, all right? All these things all come together and reflect in two ways, fear and greed. A market maker exploits that. Yeah? When you want people to get in on a move to the upside, you install the idea of them missing out. Scarcity is a crucial thing. Marketing does a great job at making people feel scared that they're going to miss out. You know, you see a sale on 50% off. Don't miss out. Don't miss out. Go and find yourself some sales marketing things, and I guarantee to you, you're going to see banners that say, don't miss out, don't miss out. Cliche as it sounds, but it works. People are easily impressionable, especially when you've got dreams on the line here. People riding moves to the upside of thinking about the money they're going to be spending when they close a profit. Before you know it, they're down here and they're thinking about how much money they have left, okay, to pay their rent. And that's the sad truth. Understanding what's going on is always the opposite. All right? Next video I'm going to be talking about a couple of more strategies that can help you understand how to really utilize these candlesticks. But the information that you're getting in the streams is enough for you to take this by the horns and apply it. Remember, practice doesn't make perfect. Practice makes it pretty accurate. All right? Now let's just have a look at what price is doing today. It's quite scary, in my honest opinion. I'm thinking to myself, boy, why is Ethereum doing what she's doing? It's just frightening. This extended move to the upside is just frustrating to watch. Notice the candlesticks. Pump, 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 but she's not going anywhere. What does that smell of? And you know what it is. All right? Go about your day, guys. Trade well.